On Sunday, 18th June, the year 1815, there was a battle in Europe being fought, the Battle of Waterloo. It was fought between the British and the French. The British were being led by the first Duke of Wellington, Arthur Wellesley, and the French were being led by the famous, the great general, Napoleon Bonaparte. This battle changed the course of European history as we know it. If Napoleon had won the war, Europe would look totally different today. But it is the Duke of Wellington that won the Battle of Waterloo, subsequently leading to the fall of Napoleon's empire. And it is after that that Napoleon was exiled to, I think, St. Helena, where he eventually died a few years later. Now, this battle is very important because it not only changed European history, but there was a man who made a lot of money trading this battle. So this is how far the profession of trading goes back. Okay, and remember the year is 1815. So there was a man named Nathan Rothschild from the famous Rothschild banking family. So what he did, the British government financed the battle using bonds. They sold bonds to finance the government. Okay, so it is Nathan Rothschild and other traders at the time or other investors at the time bought those bonds. Okay, now remember, we are in a time where the internet did not exist, email did not exist, mass communication as we know it did not exist. Okay, so as the battle is going on, Nathan Rothschild sent his couriers or his messengers to the battlefront. Okay, that means he wanted information on the battle. Why? Because he wanted to take advantage of that battle. He wanted to take advantage of the battle, of the results of that battle, because he had invested in it using the bonds that the British government had sold to finance the war. So the Battle of Waterloo ended. The Duke of Wellington won. Napoleon was defeated in the war. The messengers to Nathan Rothschild came back earlier than the official government messengers. Okay, so he paid for information much earlier. So when he got the information that the Duke of Wellington had won, and he realized that he is the first one to have this information, what did he do? He sold the bonds that he had. Okay? He sold the bonds that he had. So when people were seeing him selling, they thought that the Duke of Wellington had lost the war and that Napoleon had won. Okay? So when people saw him selling, they also decided to sell out of fear and out of panic. Okay? This caused the prices of those bonds to drop drastically. Out of nowhere, Nathan at the same time, using a proxy, was buying back those bonds anonymously without people knowing. Okay? Why? Because the bonds prices had now dropped. They were being sold at throwaway prices because people feared that Napoleon had won and that Wellington had lost. So they feared that the bonds are going to become worthless. So the prices dropped to the floor. So Nathan was buying back those bonds anonymously through a proxy cheaply. Now, when the official government messengers came and the news started spreading that Napoleon had actually lost and the Duke of Wellington had won, the prices of the bonds skyrocketed. They shot up, they went up. Okay? This made Nathan Rothschild a fortune. Why? Because he had bought those bonds cheaply when the prices were on the floor. Okay? But the point is not the money he made from that transaction, but the information he received. This information in today's world, we call it fundamental analysis. Okay, so fundamental analysis is simply economic events impacting the securities you're trading, whether you're trading currencies, whether you're trading stocks, bonds, or whatever. Fundamental analysis is simply economic information or any other type of information that is not directly related to the charts. Information that can influence the direction of price. So this is a classic case of how fundamental analysis works. So in trading, we have two types of analysis. We have technical analysis and fundamental analysis. I hear there's a third one, but it more or less borders between the two. Okay. So fundamental analysis. So Nathan Rothschild took advantage of information. He knew how to use that information and he profited from that information. So those three pillars are why we study fundamental analysis. So in Forex trading, fundamental analysis comes through the form of economic events, banking, monetary policies, central bank policies, inflation rates, unemployment rates, and every other aspect affecting the economy will directly have an impact on the currency that you're trading. That is fundamental analysis. So we'll do more videos on this, and hopefully that sheds a light on how far back the trading world has come and how best to utilize information, the right type of information in your trading. So the key takeaway from this video is whatever you're trading is going to be influenced by information that is not visible on the charts. Okay? There is a lot of information affecting what you are trading that is not visible on the charts and does not originate from the charts. So you must be aware how this information is going to impact whatever it is you're trading, and you must have a clear plan of how to utilize it and incorporate that information in your trading. Okay? How do you profit from it? How do you utilize it? How do you maximize it? Okay? You cannot escape fundamentals. They are all around us. You must be prepared for them. So hopefully I intend to do more videos on fundamental analysis, but this is just a start. Let me know what you think in the comments. Like, share, and as always, all the best.